Wall Street's roller coaster isn't slowing down. Today we've seen stocks give up their early highs, even as some tech companies posted some pretty solid earnings. The odds of a September rate cut completely nosedived and plummeted. Meanwhile, the tariff chessboard is in full swing with surprise deals, extensions, and hefty new rates being announced all today ahead of the huge deadline tomorrow. So let's break it all down. So today, pre-market stocks were pretty euphoric, reaching new all-time highs, and then upon market open, sell, sell, sell. And by the end of the day, all three indices ended out in the red territory, and Bitcoin is not to be excluded here. We've seen the volatility index start creeping back up, reaching as high as 17 on the day. And I think this is because investors are realizing that fighting the Fed is a tough trade to make. But we did see a new record today. The Magnificent Seven's combined market cap reached a new record, reaching 19 trillion between these 7 companies, who are Nvidia, Microsoft, Apple, Amazon, Alphabet, which is Google, Meta, and Tesla. And 2 of those had some mentionable gains today, Microsoft being as high as 4% today, and Meta seeing a whopping 11% gain on the day on their great results that they presented out today. But even with these 2 companies with sizable gains, the others being in the red, the other 5 companies in the Magnificent Seven, all contributed to the direction the markets took today, and here's probably why. So for one, July's wrapped up, and July is notably the best month for the stock market on record, and we're heading into a questionable month depending on the index you watch, because August for the NASDAQ is the second worst month for that index. And the second reason why is it's back to basically fighting the Fed. Now, let's look at this. This one is super interesting because yesterday, Jerome Powell had some comments, then we got some data today, and what we've seen happen is the odds of a rate cut completely plummeted for September. And we've been talking about for a while that September was the meeting. A lot of people were expecting a rate cut. So now we're expecting a 61, almost 62% chance that the Fed keeps rates the same at the next FOMC interest rate decision. And this could be made on the remarks by Powell yesterday that they're going to continue watching the data, how tariffs are showing up, and that the Fed's going to continue watching this closely, which posted its biggest increase in 4 months in June in relation to tariffs or inflation impacted by tariffs, and that'll be PCE, which is the Fed's preferred inflation gauge. So what we've seen is both headline and core for PCE rose by 0.3%, and the 12-month rate climbed by 2.6% versus the 2.5% estimated. Now, let's look at core because that's what really matters. And what we've seen is that core year over year rose at 2.8%, and that's higher than expected. But prior revisions showed that we've seen larger increases in previous months as well, leading to higher than expected inflation. The rise in goods prices up 0.4% was the fastest rate since January, showing some tariff impacts. And then consumers spent more money in June, with personal spending showing up on an increase of 0.3%. Personal incomes grew 0.3%. The savings rate, that really was unchanged at the 4.5% rate, but even though there's caution in the economy, there's still enough confidence to keep it growing. So today's PCE report led to what we've seen from others regarding the CME Fed Watch tool, and especially with Powell's comment yesterday about how we're lucky they're not raising rates, is that the popular opinion is, oh man, maybe they're not going to cut rates, and maybe they knew that inflation was going to come out a little hotter than expected. But then it goes back to, all right, well, they keep saying that it's just a one-time increase. This is just a temporary thing. Hopefully it doesn't stick around. But the on and off tariff negotiation, and now the rates are coming out and there's certainty. Does this stay longer than expected? Like, we haven't seen tariffs show up too much in the data yet, but now we're getting more clarity. And does it show a steady increase that's much longer impacting inflation regarding the data? So on top of that, we don't know where we're going to end out with that. We just got to keep on watching more data, and that's what the Fed's insisting they're going to do before committing to any interest rate cuts, which is why the SME Fed Watch tool shows these percentages they're showing for September, because they're just not budging. They don't want to commit to cutting rates in September without seeing the data. What we are still seeing is that the job market is holding up, and we'll see this for sure tomorrow. But initial jobless claims for last week rose by 1K, only 1K, reaching 218,000, which is below the 5K increase that everybody was estimating the numbers to come in at. Continuing claims are pretty much unchanged on a estimated basis, 1.95 million. Companies are still hoarding workers and not really laying anybody off. Now, next we got news regarding tariffs, and this is really the main headlines of the day, because we got a lot of news regarding tariffs today with the big deadline tomorrow. So pretty much what we got, and I'll scroll down so we could kind of see the rates that we got so far. President Trump and Mexico President Sheinbaum, I think I'm saying it right, had a phone call today to discuss tariffs to avoid the 30% rate that Trump was threatening, and they decided a 90-day extension to allow for a long-term deal to be made. Even though August 1st deadline is it, I'm not extending anything for anybody, and then this happens. So is the taco trade back. But Trump said that the complexities of a deal with Mexico are different than other countries, which is why this extension was allowed from Trump's point of view. He also said that the 25% tariff, fentanyl tariff, and 25% on cars, and a 50% on steel, aluminum, and copper stays in place. Most tariffs exclude Mexican exports that comply with the USMCA rules, and Mexico has agreed to eliminate non-tariff trade barriers. But that's pretty much all we got regarding that. And then it doesn't stop there, because Howard Lutnick announced that the U.S. reached trade agreements with Thailand and Cambodia. Without giving much more details on that info, he just kind of announced it and didn't tell us what the new rates would be. I'd assume there's still some approval process that has to go through, and maybe they're kind of like, just excited to tell the news, maybe just in the case that it wasn't quite settled yet. But I'd imagine the rates we see won't be as high as the 36% rate that everybody was expecting from the tariff level threatened on April 2nd. And the letters. So yeah, because Cambodia's was 49%, and then it was 36% on that letter. So I'd imagine the deal they reach will be to avoid these 36% rates. They also agreed to a ceasefire after receiving a call from Trump, who made the ceasefire a priority to continue the trade negotiations. U.S. trade talks with Canada have continued and have been centered mainly around the aluminum tariffs due to the U.S. manufacturers being hit, according to Scott Bessent, signaling possible relief for Canada's aluminum sector that faces a 50% tariff along with steel. And Canada is the biggest supplier to the U.S. for both steel and aluminum. So the aim is to reach a deal ahead of Friday. So tomorrow, it doesn't seem like that news is going to happen unless it comes out tonight sometime, and where I'm at 7:16 p.m. Central Time. Seems like that's not going to happen, but there's doubts as to whether or not we're going to even reach a deal in the first place. Maybe it will follow a similar suit as Mexico, and then the complexities of a deal have allowed us to extend again. Now, yesterday after my video, Trump announced a 15% tariff on South Korea, and they'll invest $350 billion into the United States. And that is down from the 25% rate that was threatened in the letter. And of that $350 billion, $100 billion will be invested into natural gas from the United States. I believe they're going to open up the market for cars and agriculture from the U.S. So where do we end up here? Well, the Fed is signaling steady hands even as inflation refuses to cool. Trade negotiations are shifting day by day, and we don't know what's going to happen with these courts and what the final verdict will be on that. And markets are struck trying to price in all of the uncertainty. So what we need to do is make sure that we come back so we don't miss the next thing that the economic drama will present to us. We want to stay on the know. We want to keep on learning together. And that's the theme here. I had my first negative comment the other day, and somebody said, stick to what you know because you don't know the markets. My guy, you don't know how much time I put into reading on the markets, watching updates on the markets, coming up with my own theses, and man, it's been years of, I wouldn't be surprised if I'm within thousands and thousands of hours of studying this, and then my degree, all of that. So I just had to vent a little bit about that, but just make sure that you come back. You don't want to miss what's next, and I'll be covering that. So see you next time, everybody.